Did you know the average return for the S&P 500 has been around 10% annually over the past century? But here's where it gets interesting. Those returns can vary dramatically based on your investment strategy. Stocks and index funds might bring steady growth, but did you know that some cryptocurrency portfolios have seen annual gains of 200% or more in peak years? Meanwhile, real estate has averaged around 8–12% annually, and certain dividend-focused portfolios yield consistent income along with steady growth. So, how does your portfolio stack up? Are you leaning toward the high-growth tech sector, or taking a more balanced approach with stocks, bonds, and REITs? A personal investment portfolio is a unique collection of assets, carefully selected to align with an individual's financial goals, risk tolerance, and investment timeframe. From stocks and bonds to real estate and cryptocurrencies, each portfolio type offers different returns and risks. Analyzing a diverse range of portfolios, like the 50 we're about to explore, provides powerful insights into how each approach can perform under different market conditions. This deep dive reveals the strengths, challenges, and potential returns of different strategies, helping viewers discover what aligns best with their own financial journey. Whether you're aiming for long-term growth, consistent income, or a blend of both, seeing a variety of options can illuminate the possibilities and spark ideas for creating or optimizing your own portfolio. Here are 50 personal investment portfolio ideas, covering a range of styles, goals, and asset types. Traditional stock portfolio focus on blue-chip stocks like Apple, Microsoft, and Amazon for stability and growth. Dividend growth portfolio invest in stocks with a history of increasing dividends, e.g., Procter & Gamble, Johnson & Johnson. Technology-focused portfolio concentrate on tech companies such as Google, Tesla, and Nvidia for high growth potential. Real estate investment trust, REIT, portfolio include REITs like Realty Income Corp and American Tower for exposure to real estate. Small cap portfolio focus on small cap stocks for higher growth opportunities and potential rewards. Global stock portfolio diversify with international companies like Alibaba, Nestlé, and Toyota. Emerging markets portfolio invest in emerging markets like Brazil, India, and China for growth potential. Sustainable and ethical portfolio include ESG-focused companies like Tesla, Beyond Meat, and NextEra Energy. Value investing portfolio look for undervalued stocks with high intrinsic value, as favored by Warren Buffett. Growth stock portfolio focus on fast-growing companies like Salesforce, Shopify, and Snowflake. Healthcare portfolio invest in healthcare companies like Pfizer, Merck, and United Health Group. Infrastructure portfolio include infrastructure-focused stocks, ETFs, or REITs for stable returns. Income-focused portfolio aim for a steady income with high dividend stocks, bonds, and REITs. Cryptocurrency portfolio diversify among Bitcoin, Ethereum, and altcoins like Solana and Cardano. Precious metals portfolio invest in gold, silver, platinum, or mining companies as a hedge against inflation. Retirement target portfolio include low-cost index funds, bonds, and blue-chip stocks for steady growth. Bond ladder portfolio build a bond ladder with different maturities for consistent income. Blue-chip dividend portfolio focus on blue-chip stocks with high dividends, e.g., Coca-Cola, ExxonMobil. Index fund portfolio simplify with ETFs like S&P 500, Nasdaq 100, and Total Market Index. High-yield savings and CD portfolio keep funds in high-yield savings accounts and certificates of deposit for low risk. Hedge fund-inspired portfolio combines stocks, commodities, and derivatives to mimic hedge fund strategies. Another great addition to a small business portfolio could be franchise investments. Investing in small franchise opportunities, like local food services, fitness studios, or boutique retail chains, allows you to support smaller, scalable businesses that already have a proven model. Low-cost ETF portfolio focus on low-fee ETFs to maximize returns over time. Social media influencer portfolio invest in companies thriving due to social media influence, e.g., Meta, Alphabet. Clean energy portfolio focus on clean energy stocks like Enphase Energy, First Solar, and Tesla. Automotive Revolution portfolio invest in EV and autonomous vehicle companies like Rivian and GM. balanced risk portfolio mix of stocks, bonds, and cash for moderate growth and stability. Sector rotation portfolio rotates sectors based on economic cycles to optimize returns. Multi-asset portfolio diversify across stocks, bonds, real estate, and commodities. Income and growth portfolio combine high-growth tech stocks with dividend payers for balanced returns. 401k or IRA focused portfolio maximize tax-advantaged accounts with low-cost mutual funds and ETFs. Options trading portfolio engage in options trading strategies, like covered calls and spreads. Private equity portfolio invest in private companies or venture capital through crowdfunding platforms. Cryptocurrency staking portfolio earn passive income by staking coins like Ethereum and Solana. Commodities portfolio include commodities like oil, gas, gold, and agricultural products. Foreign currency portfolio invest in foreign currencies like the euro, yen, and Swiss franc for diversity. Thematic ETF portfolio focus on ETFs with themes like robotics, cybersecurity, and AI. Real asset portfolio include physical assets like farmland, timber, and real estate. Venture capital portfolio invest in startups through crowdfunding platforms like Seed Invest. Blockchain and DeFi portfolio focus on companies developing blockchain technology and DeFi platforms. Millennial and Gen Z portfolio invest in companies popular with younger generations, e.g., Spotify, Snap. Telecom and utilities portfolio focus on reliable telecom and utility stocks for income. Right and property crowdfunding portfolio combine REITs and real estate crowdfunding platforms for diversified property exposure. Tax-advantaged portfolio use municipal bonds and other tax-advantaged investments for tax-efficient growth. International bond portfolio include government and corporate bonds from developed countries. Climate change mitigation portfolio invest in companies working on climate solutions like NextEra Energy. Aerospace and defense portfolio include companies like Boeing, Lockheed Martin, and Raytheon. Long-term growth portfolio focus on high-growth companies in emerging technologies. AI and robotics portfolio invest in AI and robotics-focused companies, like NVIDIA, iRobot, and Amazon. If you found this video helpful, don't forget to give it a thumbs up and hit that subscribe button. Your support helps us bring you more valuable content on building wealth and smart investing. Each of these portfolio ideas can be tailored further by adjusting the asset mix to match personal risk tolerance, investment goals, and time horizon. One standout strategy among the 50 portfolios analyzed is the high-yield dividend growth approach, which combines the power of reinvesting dividends with companies that consistently increase their payouts. This method outperformed many others in terms of steady, reliable returns, proving especially effective during market downturns. Here's why it stands out. While growth stocks often fluctuate with market volatility, dividend growers like these offer stable cash flow and are typically well-established, resilient companies. By reinvesting dividends, this strategy takes advantage of compounding, turning even modest dividends into significant growth over time. This approach shows that consistent income combined with growth potential can be a powerful formula for building wealth, no matter what the market does. The analysis of the 50 portfolios reveals key insights about balancing growth, risk, and income in any investment plan. High-growth strategies, like tech-focused portfolios, show the potential for rapid gains but come with volatility. In contrast, dividend-focused and bond-heavy portfolios provide stability and reliable income, appealing to those seeking low-risk options. Diversified portfolios, blending assets like stocks, bonds, and real estate, demonstrated resilience and balanced returns across market cycles. This analysis underscores the importance of aligning investments with personal goals and risk tolerance, proving that with careful planning, investors can build a strategy tailored to their unique financial journey and future goals. Whether you're just starting out or looking to refine your approach, there's always something new to learn on the path to financial growth. If you found this video helpful, don't forget to give it a thumbs up and hit that subscribe button. We'd love to hear your own investment experiences. Drop a comment and let us know which strategies have worked for you or what new ideas you're excited to try. And if you're ready to dive deeper, check out our next video on advanced investment strategies to gain even more insights for building a successful portfolio.